Hey everybody, thanks for joining us. Again, like we talked last week on when I did the webinar last week, everything's changing day to day to day. It's still changing day to day to day. So I thought I'd get a guy on here, Brad, who has been mergers and acquisitions and small business financing in the past. And he was on a conference call at the White House for small business relief. And he kind of switched his focus to get into this SBA financing, small business relief for packages. And so he's been keeping up on this, and he's going to give us a nice little presentation, a little bookkeeping or a little housekeeping beforehand. Remember, you got the Q&A at the bottom of your screen to ask your questions. And the other thing is that Brad told me he does have a slide deck, but he will not be distributing it because this does change day to day to day. So, but we are recording this, so it will be up there for reference, but you just will not get the slide deck. So again, if you have any questions, use the Q&A at the bottom of your screen, type in the questions, and we'll answer them at the end. And with that, here's Brad.
Thanks, Tom. Really appreciate it. Hi, everybody. Really appreciate you being on the line. So, yeah, like Tom said, we're going to give an overview of kind of the major programs that are out there right now. We want to be able to help. We want to help you understand what your options are. And, and we're doing this as a service too. So, at the end of it, we'll kind of outline how we're working with our clients. Typically kind of people figure out either like, hey, I got this on my own, I'm good. Or you kind of fall into, oh, tell me a little bit more, or, oh yeah, give me help. So, if you fall into one of those three buckets, reach out to Tom, let him know, and happy to guide you through that process. So I'm going to share my screen here. Tom, I think you got to allow me to share my screen, and I have a slide deck, and I'll walk through it. And yeah, just talk about this massive CARES Act. And so, we have a $2 trillion CARES Act that got passed about a week and a half ago. And I don't know about you, but for me, every single day has felt like days feel like weeks and months, and hours feel like days. So it's just been massive what's going on here. So we're going to talk about the two programs, but before we do, I want to kind of, just ask you a couple questions, think about a couple of questions. And so, we're talking with people literally all across the U.S. right now. And it's fascinating to see how different people react in different geographies, and just kind of how the collective mentality shifts. But one of the things we found is there's two camps of people. There's folks who are overly pessimistic and they're doomsdayers, and they're really thinking this is just the end, like this is the end. It's like the Doors song, this is the end. And then there's the other people who think that they are, there's the wishful thinkers, that there's no issue and we're going to be back to normal in a couple of days. And so, I'd like to ask you to think about, well, where do you fall at this point? Because that's going to have an influence on part of how the resources and how you react to the resources out there. And so, we came up with a third option. This really comes from our background in M&A, investment banking, consulting. I grew up in a small business, but got an MBA. I'll get into my background in a minute. There's really a third option, which is what we've been trained on, is kind of what I call pessimistic optimism, or optimistic pessimism. And so what we mean by that is, let's assume for a minute, in your business, let's assume things die down, and this has been an overreaction. And you know what? In a month we go back to normal. In 2 months we go back to normal. 3 months we go back to normal. We kind of get back to normal. But also, let's assume that things continue to get worse. All right, and our daily cases actually maybe they don't come down as quickly as they can, or maybe they actually keep going up, and this goes on for 4, 6, 9, 12 months. And so let's not assume the end of the world, but let's not assume everything's going to be fine either. And so, my question to you is, what happens to you in your business? Have you gone through the process and, okay, well, what happens if this goes on for a month? What happens next? And then have you gone through the process of what would happen if this goes on for 4 to 5 months? And then what happens if this goes on for 12 to 18 months? Right? And so that's one of the things we're trained in. And when you're trained in as analysts, is you have a best case, worst case, and base case assumption. right? And so that's, really, what we're asking. Think about that in your business. What's the worst case? Let's call it 12 to 18 months. Best case, let's call it 1 to 3 months. In our base case, what we realistically think internally here in our organization, we think the base case, the most probable outcome, probably is another 4 to 5 months of disruption, and likely probably at least 2 months of continued lockdown, if not longer. So it's there's a lot here. And so the reality is we really don't know. We really don't know where this is all going. But either way, we really believe that you got to be prepared if it's 1 month, and you got to be prepared for if it's 18 months. And I'm going to talk about the PPP, which everyone's talking about right now. The PPP is kind of okay, great. I'm like the only guy out there who's saying it's really not that great. The PPP is great if this goes on for 2 months. It's really not that great if it goes on for 5, 6, 7, or 18 months. So we're going to talk about that a little bit more. So the truth is, guys, listen, disasters have come year after year. Like, we've gone through disasters before. And, the reality is most people just kind of sit on the sidelines and kind of let the world happen to them. And I'll be honest, I was that guy, so we had, before we went head hard and, just head first into helping business owners secure this financing and helping them manage it once they have it. We had the small business, small consultancy doing business brokerage and whatnot, consulting, had clients on retainer. I had a couple clients call me up, hey, things are crazy. We have to put you on hold for a second. And I was like, oh man, I'm just, I remember telling my wife on Friday night, well, it's begun, let's tighten the belt buckle. It's going to be a crappy next couple of months. And then it hit me on this White House phone call that Tom mentioned. I was actually on this White House phone call and it hit me, and I'll get to that in a second. But but right now, what we're doing is we're helping literally anyone affected by the COVID-19 crisis navigate this CARES Act. And not only this CARES Act, but future CARES Acts, because they're already in the works. So let's take Hurricane Harvey, and I want to give you some context here. So Hurricane Harvey was like a year and a half ago in Texas. Huge storm. Just overwhelming. It was actually the federal government's largest disaster relief program ever until COVID-19 hit. And at the time, Harvey's estimated government aid was $180 billion. And that's a ton of money, right? But it doesn't even seem like that much money now, because COVID-19, we're at $2.2 trillion, and we just keep adding on. And we just added $250 billion more, or we're in the process of adding $250 billion more to the PPP program. It's an endless amount of money that we're cycling through right now. So I was on this White House conference call. So when this crisis started, one of my banker buddies reached out to me. He's an SBA lender, and he's like, "Hey, I know what you're doing. You should probably be on this call. It's the White House phone call." I'm like, "White House phone call, whatever. Like tell us to wash your hands or something. Like, this is lame." So, but I was like, "Oh, whatever." I went to school in Washington D.C. I'm like, let's see what the White House has to say. And I thought it was gonna be like a public service announcement message. No, like it was like a legitimate White House phone call. Like, there was an operator who came on and said, "This call is off the record. I'm going to announce the special assistant to the president, so-and-so, whatever her name was." Like, she came on and was like sent us an email afterwards, like she actually is the special assistant to the president. And on the call was the SBA, was the White House, was the Department of Labor, and the Department of Treasury. And they all said on that call, and I'm paraphrasing, but they all said on the call, "We are completely overwhelmed. We're slow to act. We're trying to do everything we can. The unemployment offices are absolutely overwhelmed. We're having 6 million unemployment claims a week. They said we can't keep up. The websites are down. The banks are flooded with applications. It was just an absolute disaster. It still is, in a lot of senses. And that was the moment where it was the aha moment, which is small business owners are going to need a lot of help. I think we all know the phrase. I'm here from the government. I'm from the government, and I'm here to help. And that's what flashed through my head. So that's when we really pivoted. It took massive action here. Because listen. By Trump's own accord, this could last beyond August. This is printed, in the newspapers. And I know he's saying let's get back to work, and he wants to get us back to work. But the reality is, the president himself is saying this could last beyond August. And so when you think about that best case, worst case, and base case scenario, we're kind of using that as our base case scenario. And so what happens to your business? Are you set up to weather the current reality now into August? And so we're going to talk about that and what the government's providing out there. So it's a little bit about me. I grew up in a family business. That's me actually in the early 1980s, working in my dad's body shop. And I ran that business for 10 years. And so in my early 20s, I was running a multi-million-dollar business and got, by accident, I never planned on it, but I ended up doing it. Ultimately left, started my own firm, got an MBA, focused in finance, started my own firm doing, after doing some equity research work, we just, we're bringing Wall Street to Main Street. So we were doing small business brokerage, consulting on how to run a more profitable business, strategic work, bank financing, to support the small business M&A. So SBA financing as well, and it was and still it is continues to be a great business, and doing it for these guys. I have a rule that I'm always home by Friday night because even when I'm traveling, I want to be home Friday night, so I have the weekend with these guys. Although I'll be honest, I've been breaking that rule this past couple of weeks. The great irony being I'm at home all the time, and yet I'm working all the time. So, like I said, that's why we pivoted so hard. And so over the course of a weekend, we put together a website and kind of basically launched to the world saying, listen, like, we are here to help you secure funding. And that was about 3 weeks ago. And my goodness, have things changed in 3 weeks. I mean, literally within weeks, things where we were seeing massive changes in the way that applications were being processed, massive changes in the way that the terms for the loans that we were seeing being offered by the government, and we'll get that into a second. But really, our motto has and continues to be that you got to get to the front of the line. And we've seen this in banking for the past week. Those who are in the front of the line, those who we submit applications for Thursday night, Friday, are now in underwriting right now. The quick movers were the ones who are seeing results now. And the ones who are in the back of the bus, the back of the line, are sitting there kind of wondering, geez, what do I do next? And so, we continue to say you move quickly, and you got to be flawless in the process. So that's that, and then the next phase of this, which we haven't even begun to talk about yet, you can see actually I have a blank slide here because I haven't finished putting that slide in there, is what happens next once you get the money. How do you actually manage it? Because the big concern I have, and this just came out in SBA's most recent guidance, and I'm on conference calls with SBA. I read the Treasury guidance. I read the SBA rules and regulations as they come out. This came out about 48 hours ago. There are some incredibly steep penalties. I mean, incredibly steep penalties for knowingly misappropriating funds that you receive as a result of the PPP program. So I think there's a lot of folks out there who are kind of, right now there's just like kind of calm, like, oh, we got our forgivable money, life is good. I call it being high on hopium. I think a lot of folks who take a cavalier approach to this in 8 to 12 weeks time is going to be regretting that decision. It's going to be very painful down the road. So let's talk about what's available today and kind of what the programs are that we think that everybody should be aware of, everybody should be taking advantage of, and then we'll talk about some of the things you got to watch out for as you take advantage of those items. So we'll dive deeper in each one of these. So we're going to talk about disaster loans up to $2 million, payroll tax credit for folks who are sick and who've been affected by COVID-19, the withdrawal, the elimination or temporary elimination of the early withdrawal penalty on your retirement accounts, the ability to defer payroll taxes. And those things have been in place for weeks now, which, like I said, it feels like months. And then about a week ago, we had the CARES Act, the forgivable loans up to $10 million. We're going to talk about that. I'm a little bit of a contrarian on these loans, but my banker friends all agree with me. They just won't say it publicly. And then emergency grants, the $10,000 grants. We'll talk about some of the recent guidance on that. I like those. I like grants. I like money you have to pay back. And the ability, Trump's continuing to push for deferral of payroll taxes. Tom's probably aware of this, but there's the opportunity to get cash for net operating losses in 18, 19, and 20. And so the ability to either carry forward historical net operating losses, but also taking your net operating losses now and carrying them backwards and restating your taxes and to get credits for your operating losses this year. So I think that's a fantastic opportunity for folks who are comfortable, basically going back and taking losses from this year and applying them to the previous years to get cash now. And then there's an employee retention credit out there. So the retention credit depends on the age you take. So again, the kind of key thing here is that you can't double dip. You got to be careful with all that. And so you can't double dip. You can't take kind of stack things. You could combine them, but you just have to be careful you don't overlap. But there's $10,000 grants. And then lastly, my favorite is the check that Donald J. Trump is going to send to every household in the United States. And my favorite part about this is he is throwing a fit saying he wants his signature on the check because it's his recovery bill. So I can't wait to actually get that check. I'm kind of excited about it. So $2,400 for a family, $500 per dependent, and if you're a single filer, $1,200 there. So those are all fun things. What's coming up? So there's already another stimulus bill in the works. And the reality is, this first stimulus bill it's by the Treasury Zone of Admission. It's a 6 to 8 week program. It was always designed to be short term. I'm a big fan of Mohammed El-Arian, who is the former head of PIMCO, and he had a great quote the other day. He said, listen, this feels like a war, but we're not going to have he goes, this has all the negative aspects of the war without any of the positive aspects of the war. Meaning that after a war, you often have a period of rebuilding, and you see economic activity really ramp up after war because you have to rebuild buildings and machines and whatnot. And to his point, there's not going to be a rebuilding period here. So we're going to have to continue to stimulate the economy to hopefully maybe artificially create that rebuilding. So there's already talk about that. There's going to be a lot more funding along the way. And for those of you who might be concerned about not accessing these funds running out, I send a video note out to my clients every day. Typically at least once a day, I'm saying, listen, turn the TV off. Every banker I talk to says, listen, we have money. It's going to take a little bit of time. We're going to get through it. We have money. Just take a deep breath, everybody, and we're going to get through it. So it's coming. It's just there's no playbook for this. There's no playbook. So, and so with that said, I keep this slide here intentionally because to illustrate the fact that there's no playbook. And what I mean by that is a little over a week ago, we put this slide out, and this was after the CARES Act was passed. This was law. Right, and so we had the PPP and we had the Economic Impact Disaster Loan, and at the time, the PPP was 2.5 times payroll, 4% interest, 6 to 12 month deferral, and a 10-year payback period. Well, that's wrong. That in 1 week, this program changed 3 times. It went from 4% interest to 0.5% interest to 1% interest to from 10 years to 2 years to deferral it's deferral but interest accrues. The amount of change that we see in these programs is just absolutely astounding. So I leave that in there only to remind us all that just a week ago we thought we knew everything, and within days all that was expired. And so that is the new reality that we're here. So let's talk about what these forgivable loans are, what they aren't, how to take advantage of them, and kind of what you need to know about them. So as you've probably heard, you can apply for up to $10 million. Now, with that said, you have to use them for certain reasons, certain purposes, and the law is very explicit on this. There's a specified number of uses, and kind of the easiest way to think about this is payroll, rent, utilities, and mortgage interest, and you don't have to pay back. Hey, that's great, right? So you don't have to pay it back, if you can use it and you could actually document you used it for its approved purpose. So that's number one. So now you can't just get $10 million because you want $10 million. And it's interesting to watch the government just ratchet down all of these big promises they made a week, 2 weeks, 3 weeks ago, and start to really ratchet down, how they're analyzing and calculating these things. So, so it's all about, the calculation. So we'll dive into the calculation in a second, because it's not as simple as just saying what's my payroll times 2.5. There's actually like a process we recommend everybody go through, and most banks are starting. At first they weren't. Most banks are starting to require these worksheets along with the application. So, so first things first, though. To get the loan, you're going to need your payroll information up to date. So if you use a payroll provider like an ADP or a Paychex, you're in luck. They have most of these reports. At a snap of the fingers, you could get these reports. You're going to need 2019. You're going to need year-to-date 2020. You're going to need to have it broken down by employee. You're going to have all the detail there. If not, you're going to run into problems in underwriting. Additionally, we're going to go through an underwriting process. And every bank is slightly different. Even though these are guaranteed by the SBA, they still have, there's a lot of risk to the banks still, and that's why we've seen all of this chaos and changing rules and give me this form and don't give me that form and give me this and don't give me that, because the Treasury and SBA continue to update their guidance and their requirements. And so we continue to learn more and more and more. And finally, after what seems like just forever, we're starting to see those funds start to flow. Yesterday, today, we're starting to see the money coming out. So the log jam is breaking up. But most importantly, and this is where we really think a lot of people are going to find themselves in trouble, and loans are not automatically forgivable. And I think there's an assumption out there that, I get it, I just don't have to pay it back. No, this couldn't be anything from the truth. You're going to have to prepare an accounting package that shows you've dispersed these funds in accordance with the law and the covenants. And so that's really, the area that, and I'll show you some of the tools we're using, but how we're helping guide people through this. So this is the most important part in our opinion, because if you do it right, you're talking about tens of thousands, hundreds of thousands, potentially even millions of dollars you're not paying back. If you do it wrong, not only you're going to have to pay it back, but you could be subject to actual civil liability here. And so right now, here's the maximum penalty for knowingly misappropriating funds: $1 million, and up to 5 years in prison. So the government is not fooling around about this. They're not dumb. And, I grew up in a small business environment. I know a lot of small business owners, and I know how we all think. I know how you think, which is you're already thinking, how could I use these funds? How could I game the system? And I'm telling you, don't do it. It's a bad idea. So you want to make sure you're just very detailed and very thoughtful about how this works. So how do you get approved? How should you get? So 2.5 times your average payroll. We actually have a calculator that breaks down what what's included in that, what's not. That's changing by the day. In fact, I'll even kind of poke over here, show you our payroll. So I actually just made an update to this. So there was a bit of ambiguity here. You can see here we have our whole calculator. Are you seasonal employer? Does it earn over 100,000? Whatever. All the breakdown. We just added a update to this because there was some guidance from the AICPA. From market review saying, no, include your federal withholding, include your FICA. And then the SBA came out, not last night, the night before, late the night before, and said, actually, no, you can't include that. So we had this in our calculator. We just updated it to reflect the recent guidance. No, so again, these things, they keep changing by the minute. Thankfully, the SBA said, hey, listen, if you applied over the old guidelines and you've already applied it, there's not a penalty here. We recognize that things are moving around, but going forward, you have to take this into consideration. So, again, just a lot of movement here. So that's how you determine your amounts, and it's pretty straightforward. So you determine your amount, and then you have to actually document how you're using this. And so for any of you who've gone through the application process already, we would strongly recommend that you start thinking about having segregated accounts for these funds. It'll help with when it comes time to submit for reimbursement. So let's talk about disaster relief. I feel like everybody knows about the forgivable, the PPPs. I feel like disaster relief is like the redhead stepchild, and I can say that because I'm a redhead. I'm not a stepchild, but I'm a redhead. That nobody really knows about, or if they know about it, it's a little confusing. It's from the government. What's going on here? We actually think that we call them disaster relief loans, or IDLs for short, is a much more flexible product, and we're encouraging all our clients to take advantage of both. So these loans have up to $2 million. So at face value, you're like, oh, hey, wait a minute, that's a fifth the size of the PPP. But the reality is that I don't know many people getting $10 million of PPP relief. I mean, that's a huge. Basically, I mean, that would imply you have $4 million a month in payroll. I don't know many small businesses that have $4 million a month in payroll expenses. So again, headline number, certain. I mean, this really was. I mean, I'll get into it later, but I mean the frugal part is nice, but in order to get forgiven, you actually have to spend it. And there's a lot of rules and regulations around it. So a disaster relief loan, by contrast, is very open, very fluid, very it's just a very much more flexible product. So up to $2 million, 2.75, 3.75%. That is, if you're a nonprofit, 2.75. If you are a for-profit, 3.75. Up to 30-year terms, but that's on a case-by-case basis. It's going to be dependent upon what the SBA case officer comes back with, and it is negotiable. The amounts and the terms is all negotiable with the SBA. There's no prepayment penalty, so that means you could take the funds, you can pay it back if you don't use it, and there's not a prepayment, which is very different from traditional SBA products. Traditional SBA products tend to have anywhere from a 3 to 5% prepayment penalty, so significant improvement there. No interest or principal payments until 2021. However, interest does accrue. So while you're on the deferral, you are accruing interest still, but you don't have to make any payments until 2021. And of course, the biggest difference is you actually do have to repay these. There's no free money, but this is the government's version of kind of business interruption, the business interruption line of credit. So a lot of people say, okay, well, hey, that sounds interesting. How do I qualify? I think 3 weeks ago people were saying, well, I need to qualify. I think today we're in the era of free money, so we just kind of assume we're going to get it. But there actually is an underwriting standard that you go through, and so generally speaking, and this applies to any loan that you're going through. There's what we call the 4 C's, and so I'm going to break through those and break those down for you, so you could think about how underwriters assessing you and your business and how you actually can get approved for a loan and how much you're able to get approved for. And then with the disaster loans is the 5th key component that we want to highlight as well. So first one is cash flow. So the government is going to look at your cash flow pre-crisis because they want to ensure that the money they give you, you have the ability to repay coming out of the crisis. So they're going to look at what you were doing before and say, okay, we assume you'll probably get back to that area, and we'll kind of structure the loan, the payments around that pre-crisis cash flow. They're going to look at your credit, although they said, listen, we're going to be very flexible. The old days it was 650 was kind of the threshold. Now they're saying, listen, don't let bad credit stop you from applying. Apply anyway, and that's straight from the SBA. Collateral, again, in times past, the 7 A's have no collateral requirement, which is makes sense because this is the PPPs are effectively a payroll. They're an employee aid package. I mean, the government says that like this. The intent is to keep people employed. It's not a small business bailout. It's a bailout of employees working for small business. So, so there's collateral, which is been significantly reduced in terms of significantly reduced. So, business and personal assets. And there's been an elimination of primary real estate as a form of collateral, based off my understanding right now. Of course, that could change. So they have relaxed that substantially as well. Lastly, and this is what I really, there's certain times, that where I really feel, proud to be an American. And I think when we go through times of crisis, that kind of comes out. And I think, the character part of this is something that if anybody's gone through the process of applying for a loan before with the SBA, they always ask all these kind of like weirdly like intrusive questions like, have you ever been arrested? Have you ever been convicted? Like there was actually at one point for some of these, they would ask you, it's not the questions right now, but like, well, it's on the idle. Do you, do your revenues come from gambling? Do your revenues come from activities of a sexual nature? They're oddly intrusive, and but character is an important thing, an important qualification for the government and any lender for that matter. And so the general approach is, if you lie, cheat, and steal, and especially if you lie, cheat, and steal from the government, i.e., you don't pay your payroll taxes, your sales taxes, or you evade your federal taxes, you're going to have a hard time qualifying for this. The government's position typically is, if you can't pay us in good times, why in the world would we pay you in bad times? And so that's something they actually do. They stick to, and they stand by that. So and that gives me reassurance. I appreciate that. So. And then lastly, the last qualification is proven economic impact. And this has got a couple people kind of caught up, which is, okay, well, how do I prove my economic impact? And when the program first rolled out, they added kind of a complicated set of calculations you had to do. And people were like, dude, I have no idea what this is. They've since eliminated those initial questions, but they're going to, when the SBA comes back, they have a calculation they use to approximate your economic impact. And so one of the things that we're doing with our clients is saying, listen, we're going to assess your historical financials, and we will be your point person when conversing with the SBA in terms of ensuring that the monies they're fronting in the form of this loan are sufficient to get you through the crisis. So you still have to prove the economic impact. It's been relaxed with how to prove those, but it's still an important part of the process. So those are the kind of two main programs, and so I want to give you kind of a good high-level overview of that. Leave some time open for Q&A, but just kind of before we open the Q&A, I just wanted to just put a high-level touch on the tools that we're providing to our clients, how we're helping them through this crisis. I touched on the calculator. One of the things that we've built out here is not just the calculator, but the actual forgiveness amount as well. And so, again, this is a key part of it, because documenting your forgiveness not only maximizes the forgivable amounts, but it also, there's the liability issue here, and we really are concerned that this might be underappreciated by the business community in general right now. Again, knowingly misappropriating funds from this program, I mean, there's very real penalties here. But even if it's not knowing, even if it's unintentional, there's still a cost here. And so not only do we have the forgiveness calculator, but we also have the repayment schedule in the event that, because there's certain thresholds, right? You have to have 75% of play the employees, and if not, you're going to have an adjustment. And so things change. We can't always control what's going on. So we have the actual repayment calculator as well, based off of the principal, the payment terms and whatnot. So again, we want our business owners that we're working with to go with eyes wide open. So the most important thing is that we're thoughtful about how we're approaching that. So so we have a lot of tools here. And then I think the second area is our document management portal. So I mean, if you've gone through the process already, you know just all the paper, all the forms you have to have, and having a way to organize. And so we're really excited about this. We just launched it this week, and so we have this is our comprehensive PPP. So this is what we built out before we had updated guidance. So you can actually see, we have the application form, the 940, 941, the payroll summary reports. There was a time when a lot of the banks were saying, well, we need your bank statements. We need your year-end financial statements. They've since relaxed that, so we have a streamlined form now. But you can see we have an entire simple, easy-to-use repository for folks to keep track of this stuff. Because again, we can't stress enough, you actually have to apply for forgiveness, and you want to be able to do it quickly and efficiently in the process. So these are some of the tools we're using that we just wanted to highlight, and that's really a key value add of what we're doing here. So. Not only, and we're going to continue to build out tools that as we learn more. Of course, we're helping people with the application process. We'll help them get through the PPP. We have a network of lenders that we're working with. Some lenders who are non-bank lenders who we love working with because they're just processing machines. They're just cranking things out right now. And if you've had trouble with your bank, or you've probably heard banks saying, well, we're only doing this for existing customers, not new customers. Everybody's upset with their bank right now. And so we have a network of lenders we're working with that are non-bank lenders, which means they don't have depositors. They just process loans. They're SBA approved, and they're just cranking it out. You don't have to open up a new account, do anything crazy like that. So, we're just really trying to be that resource, that back office, so that you don't spend all your time trying to gather and document the payroll, the forgiveness loans, which we're doing this for you. So just like the same reason you hire Tom to do your taxes. I mean, anybody could do this, right? Anybody could go out and do this. But you hire somebody that who's been through it 30, 40, 50, 100, 200,000 times before. So so that's what we're building out here. So if it feels like you say, hey, no, dude, I got this, I'm on my own, it's cool. But if you kind of fall into, hey, I'd love to talk a little bit more about that, let Tom know. He'll connect us, and and we'll if it's a good fit, we'll get to work. So happy to answer any questions you guys have. But more than anything, we just want we want to be a resource for you guys. It's the most difficult business time I've ever experienced. This is, I mean, I lived through 2007, 2008, but this doesn't even compare. This is the, unfortunately, the Great Depression of our time, and it's really tough. So we're excited because we're putting people to work. We're hiring people. We're hiring people to process these documents. We're hiring people who've been laid off from large corporate gigs. We're helping you maintain people working as well. And so it is really meaningful work for us. So with that said, want to open up to Q&A. Typically, the best way, like Tom says, just type a message in the chat box, and we'll kind of talk through any questions you have on the whatever it might be. So
we got a couple out there right now, Brad.
Awesome, cool.
The first one is, what are the scams that are out there?
What are the scams that are out there? Yeah. So I think probably the number one scam is if somebody comes to you and says that they could get you to the front of the line, that they're going to expedite your application. I think that's probably the number one scam that's out there. Like, I mean, listen, there is no expediting, and there's folks out there who do what I do as well. And I think there was a frustration for a while because, one, there were scams out there, people saying that they were going to basically do that. Two, then the banks would come out there and say the same thing, and we're like, the banks are the biggest liars of all. They don't even know what they're doing. How could they expedite it? So it's just it's been crazy. But I think probably the main thing is one, I can get you to the front of the line. So we could make you as efficient as possible, but let me tell you something. We're like everybody else. You submit the application, and there's a waiting game, right? And none of us have control over that. So I'd say beware of that.
All right, question 2, kind of about the payback. With PPP loans, I keep hearing that you have to hire back the same amount of employees back within 8 weeks of the loan going through. My salon is closed and the reopen date keeps getting pushed out. If the governor keeps pushing the date out and it goes beyond my 8-week window, what happens then?
So the way the PPP works, we just got guidance on this 2 days ago, is you will get approved for 2.5 times your historical, let's call it 2019, your historical payroll amount. Now, in order to be forgiven, you must spend 75% of the loan amounts on your wages. Now, the government said that, and they continue to say this is an employment program, and we recognize that we recognize things have changed. So the SBA, somebody asked a very similar question on the SBA call I was on recently, and what the SBA said was, what you need to do is you need to get the money. You need to, anybody who was laid off, you need to offer them a job. And if they refuse, you need to document that and keep that in your record. So again, documentation is going to be very important in this process. So document it, keep it in your record. So now, in addition to that, so when you apply for the loan, you get approved, and the lender has up to 10 days. I got to double check my math on this, but 10 days, I believe, to fund the loan. And that's when the day you get your loan funded is the day that 8-week forgiveness period starts. So if you're going through the process, our recommendation is start talking to your employees who you laid off. Let them know you're going through the process. Let them know that you want them to work. Let them know that you intend to offer them jobs as soon as you have the money. You kind of do that work up front, and start that process. And if they say like, I don't want to work, whatever, they are a protected class. They are a protected class, so you can't make them come back to work, which is going to be an interesting situation.
The other side of that, Brad, is what if they can't reopen?
And if you can't reopen, so that's where so you have to be careful on how you spend the money. If you can't reopen, if you get the funds but you can't reopen, our recommendation is hold on to those funds, use them for approved purposes, and any funds that you don't use for approved purposes, repay at the end of that period. That's going to keep you out of any sort of liability.
So as an example on there, if they can't reopen it, they can at least pay for their utilities and rent or mortgage interest during that time, but maybe not payroll.
Correct. And you could hire people and so they could stay home. And again, this is an employee program, so you could still hire somebody and say, we want to come back to work. We want you to come back to work, especially if their wages if their benefits, unemployment benefits are less than their wages. You could still hire them. If you're not able to reopen, you can still hire them and pay them and submit for forgiveness.
Okay, so then during that time, they just wouldn't be collecting unemployment. Basically, you'd be paying them for that whatever until that loan runs out. And then after that loan runs out, then you could have them go back on unemployment if you haven't reopened yet.
Exactly. Yep. And I suspect that 8 weeks from now, 12 weeks from now, we'll probably have another kind of a second round of this, which is because they say you can only, so here's the other thing, you can only apply once for the PPP. You can apply for the disaster loan as many times as you want over the next 2 years based off of your proven need. But the PPP only one time, and it expires June 30th. So I suspect, I don't know this for certain, but I suspect there's a very clear cutoff date here that there's going to be a second round of employee protection, employee aid that will be coming out to cover kind of the period after June 30th.
All right. The next question, can you talk a little bit about the SBA loan? The SBA system has crashed, but DEED has been saying we can get the $10,000 in 72 hours, and it is not true. We've applied for about a week ago and haven't heard anything, and Minnesota Department of Labor said the same thing.
Yeah. So So here's the thing. So the EIDL loans, they're going through a massive upgrade of their website right now. We should see some significant improvements to the website either later this week or early next week, where we'll actually be able to have a little more tracking of our applications. If you inadvertently did not apply for the $10,000 grant, to go back and apply for it, because you have to put your bank account information in, whatnot, your routing number. You could, if you forgot whether or not you did or didn't, you could go back and check. So the SBA is working on that. They said they're working on it. Here's kind of the biggest misconception was, I think a lot of people, the message was apply and you get $10,000 in 3 days. Well, it's actually apply, and then once the application is assigned to a case officer, then you get $10,000 within 3 days. Well, the bottleneck is getting assigned to a case officer. And so that's why we haven't seen those $10,000 bonuses come through, grants come through, because most of them haven't been applied to a case officer yet.
Okay. Next one. They worked out the internet SBA loan. They were working on doing it on the internet. They asked for info I never give out, like your social security number, bank account numbers, etc. Because Tom says don't ever give that out over.
I will be very transparent, because we're helping people go through these questionnaires as well, and we're asking for similar types of information. And it, even on my side, it feels a little uncomfortable asking for this sort of stuff, because this is the stuff that's like, my goodness, man, if somebody was asking me this, I'd be like, gee, I'd be a little apprehensive. But yes, so they're asking for socials, they're asking for EINs, they're asking for bank routing number, bank account number, for all of it. And right now, it's way better than it was even 2 weeks ago, when on top of it, we were completing personal financial statements for everybody. And so now we were looking at, brokerage statements and bank account balances and so yes, I hope it isn't the case, but security, it's going to be an issue. There's a lot of information flowing around right now. So I think coming out of this, companies like LifeLock and whatnot are probably going to be very, very busy.
All right, I've got one question on the PPP loan for me.
Yeah.
That I think most people are curious about as well. Does it make sense to segregate it out and put those funds like in a totally separate checking account? Okay, let's say you've got ADP or paychecks and they take the funds out of your regular checking account. So you have a totally separate account where you put out the loan money that to make sure that you're just doing the eligible expenses. So like when paychecks takes out of the regular account, you could transfer from the loan into your regular account and have justification to show them saying, here's my payroll for that period that I transferred. Is that probably like the best way to handle this loan?
That's our recommendation right now, is to have segregated accounts. And one of the things, so on the guidance from SBA right now, the payroll, it's just in the words they chose. So on the payroll side, it said proof of payroll, which implies to me, and I don't, it's a bit of a crystal ball, but implies to me that you're going to have to have some sort of reporting proof, whether it's an IRS documentation or proof from the payroll provider, with a matching bank statement. But interestingly enough, the words they chose for the other expenses, utilities, your interest, whatnot, they use the word proof of payment, which is different from just proof.
Right.
And so, I suspect that the threshold is going to be there's going to be certain items that you actually have to prove payment and have matching bank statements with. So our recommendation is, yes, have segregated accounts for two reasons. One, because it's easy, you could prove what you spent it on. But two, if you get an EIDL loan and you get the PPP loan, which, well, I just saw today one of the banks said, no, you can't get both. It's crazy. You could absolutely get both. In fact, SBA said get both. It's crazy, just like the stuff you see that's out there, from people who you kind of expect to have the answers, and they don't have the answers. So, but if you get both, here's the thing. If you use your EIDL loan to make payroll, well, now you just invalidated the opportunity to get your
forgiveness,
PPP forgiven. So again, segregate them, and just, it might be a little more record keeping in the short term, but like, you'd rather be safe than sorry.
All right, looks like we've got one more. So if anybody else has any questions, why don't you get them in quick so we can wrap this up. What about recent bonuses that unemployment is offering the next couple months? Employees can make more on unemployment than coming back to work. Therefore, they refuse to come back to work. As an owner, can we still make them come back? No, as an owner, we cannot make them come back, correct?
Yeah, so here's the thing about the CARES Act, which is going to have I understand the intent. I think it's going to have a huge unintended consequence, which is, so basically we are all a protected class now, and all we have to say is, I'm afraid of coronavirus and I don't want to come back to work. And I mean, and I forget what is it, like 6 months now? I mean, it's some absurdly long period that you're eligible for unemployment. So I wonder oftentimes, employment was so tight before this crisis that, and going into this crisis, there's this huge protected class of workers now who are effectively offered unlimited unemployment. What's that going to do with the unemployment on the coming out of this crisis? I don't know. My crystal ball doesn't go that, can't see that far in the future, but I do worry what that's going to do for access to talent in this country. We'll see.
All right, it looks like we got one last question, unless somebody else types a quick one in. It says, you can use all of the PPP for payroll, correct? And what I think they mean is that you don't have to spend it on mortgage and utilities. You can just spend it all on payroll during that 8 weeks and have it all forgiven, correct?
Correct. Yeah, the threshold's to the minimum. So you have to spend at least 75% of that on payroll. But yeah, you can spend more.
All right, it looks like one more came in. Are these bonuses charged against the unemployment rate? I think that's going to be a state-by-state basis, but as far as I know, in Minnesota, they weren't going to charge against your current unemployment rate if employees are on unemployment because of COVID. So I think that's going to be a state-by-state basis, but I think in Minnesota, they're not charging the employer rate against the employer.
Yeah, I haven't looked on our side as much. So
Yeah, like I said, I
yeah.
think that's going to be case by case. But if I remember correctly, once Minnesota said that you could apply for unemployment right away for COVID-19, they were not going to charge the employer's rate increase because of the employees going against them. All right, and one last question: where do we go from here?
Where do we go from here? I think probably the best thing is reach out to Tom. I mean, Tom and I know each other. We run in some of the same circles, so he'll be the best contact. And Tom, I just say, Lauren she must have had to pop off. Lauren was on the call. Lauren's handling all kind of the back end stuff for me right now. We have an entire team behind us, so reach out to Tom. Tom will connect us, and we'll go from there. Because really the way we see this is Tom and I are going to be partners in this as well, because just due to the massive amount of documents that are going back and forth.
All right, I think that is it. Thanks for your time, Brad.
Oh, my pleasure.
Remember, everybody, we're not going to get the slide deck out because it's changing so much, but the recording will be out there for people to review. And remember that this is going to be changing day to day still. I
sent out an email on Wednesday night, and this morning I was reading something, and I said, damn it, gotta redo that all over again.
So, and again, if you have any more questions, send them out to me, and between me and Brad, we'll get your questions answered, and hopefully we can all get through this together and safely and come out on the other end financially.
Yes, indeed. Thanks, Tom. We'll talk soon.
All right. Thanks, Brad. Thanks, everyone, for joining.